Hello everyone and welcome to a stock simulation overview video. I'll try to keep this brief, but we're just going to go over how to participate in the stock simulation and what to expect. So first things first, what is the stock simulation? So stock simulation is managing a self-directed portfolio of stocks, bonds, ETFs, and options using virtual currency, meaning not real money. We do this so that there's no risk to you, the investor, and then you can practice and try out investment or trading strategies that either you've learned or have kind of devised yourself. But no matter what happens, it's in a risk-free environment, and you get to follow a real-world active market over a set time frame. So now we're going to get into how to participate. So first things first, make sure that you're signed up for the FA newsletter. The stock simulation sign up is going to be in there, usually toward the bottom. And then after you sign up using the Google form, you will just wait to receive a welcome email. As I have in this PowerPoint slide, it's not automated, so just please be patient with me. I try to send them out as soon as I see them. And then lastly, once you get that welcome email, you're just going to follow that invitation link to Investopedia and log in and create your Investopedia account to join the game. Now, the game's going to start on September 30th and last until December the 2nd. However, you may join at any point during the semester. However, there is no additional time if you join late, so you might be at a disadvantage. So, you get into the stock simulation, the game is started. What do you do? First thing you want to do is probably try and make an investing plan. You're going to start off with $10,000, which is a realistic amount of money. And that trading or investing plan is really just going to consist of what you've learned or what you want to try as a trader or an investor. Typically, the plan can be broken down pretty simply. What type of assets do I want? How much do I want to invest in each of those assets? And then what determines if I invest in an asset? And then does that mean, are you going to do some fundamental analysis over specific companies? Or are you going to do technical analysis over entire sectors? Things like that. And once you have that plan, it's time to execute that plan. Once you execute the plan, you acquire the stocks, bonds, ETFs, whatever financial asset you decided on. It's time to just maintain your plan throughout the duration of the simulation. If you're trying to do some trend trading, it's making sure that you're staying up with the trends, seeing what's going on with companies' earnings, what's popular in the news. If you are paying more attention to fundamentals, you may still be interested in earnings, but less so in a trending way, more so of a, hey, this company did poorly, maybe I should reallocate some of the money I have in them to someone else who might be performing a little bit better this quarter, or anything in between. So as I have here on the right, always keep in mind current market trends, news affecting a market, or any assets that you are invested in. And then understand the difference between systemic and idiosyncratic risk, which essentially just means, is the entire market going down, or is just this one stock I'm invested in going down? And then make decisions based off of that. But no matter what, bottom line, make sure that you're keeping in line with the goals that you've set for yourself in the planning phase. Toward the end of the competition, it'll become time to liquidate your portfolio, meaning that all the positions within your portfolio must be closed by the close of the market on December 2nd this year by 3 p.m. Central Standard Time. Meaning that essentially you're just converting your entire portfolio back to cash. Now, when we judge the competition, we're going to judge it using something called risk-adjusted returns. Risk-adjusted returns, specifically the Sharpe ratio in this instance, demonstrated in the graphic on the right, will allow participants to rely less on luck and more on portfolio strategy, meaning that someone who may have gotten extremely lucky with some very, very risky options plays or something similar will be weighted, their returns will be weighted significantly less than someone who has consistently high returns using less risky assets. And then the winner of the competition will be announced at the FA banquet at the very, very end of the semester. And if at any point you have any questions or need any guidance, please feel free to reach out to me. Again, my email is research@bauerfa.org. And I look forward to seeing everyone participating in the competition, and I wish everyone good luck.